in Christensen, you had a teacher, a professor at a community college, right? And the community college had two locations. One was a mile from their house, from his house. One was 25 miles from his house. So he had two different campuses that he would teach at. Okay. And some days he would teach at one, some days he would teach at the other. Sometimes he would teach at both. And what he would do though is he established his own routine where every morning he would wake up, he would go to location one, he would retrieve this roster that he had with all like social security numbers and stuff of his students. And no matter where he was teaching during the day, whether he was teaching just at one or two, right? He would always, so say he was teaching at class two, university campus two, he would go to one first, get the roster, drive to two, teach, then drive back to one, lock the roster back up and go home. And so what that means is pretty much no matter where he was teaching, every day that he taught for the year, he deducted mileage related to going back and forth between the two campuses, okay? And at first blush, I bet a lot of people in our industry would say, yeah, you know, that mileage is fully deductible because we all know in our heads we have this rule. And it actually comes from Revenue Ruling 55-109, but it says, you know, if you work in multiple locations for an employer and you travel back and forth between those locations during the day, you can deduct that mileage, right? So that is a derivation from the normal rule. The normal rule under section 262 is commuting expenses, as we kind of talked about before, are never deductible. So if you go from your house to, you know, your employer's office, you're never going to deduct that. But if you go from your house to your employer's office, and then from that employer's office, you know, to another location, those amounts get to be deductible. And so we tend to think, hey, anytime you travel between multiple work locations, it's going to be deductible. Now, we know that the rules for travel get unbelievably complicated, particularly when you are an employee. And again, we don't have to worry about those rules so much for the next few years, but we've got Revenue Ruling 99-7, which I guarantee tax people have all heard of, but we don't remember off the top of our heads. But it deals with the rules where if you're going from your home and to a temporary location within the metropolitan area versus a regular location, and it gives us all those crazy rules of when they're deductible. You know, those are never easy, but this case is much more simple than that. It's just, hey, guy gets up, goes to his employer's place of business one, then to place of business two, back to one, home. Can he deduct those costs all day? And again, under current law, we're not gonna have to worry about that for a while, but I just thought it was interesting because similar to our 461 case, where sometimes we get ahead of ourselves, we have to remember here, when we say we can deduct costs of going from one work location to another, we're saying that when there's a business purpose to do it. And in this case, the school did not require him to go from one location to the other and back. This was his personal choice. His choice was to lock up the roster at one location, go get it, drive to the second location, take it back to the first location, lock it up, and come home. And so I like this case because, again, similar to our 461 case, before we get into this complicated tangle of rules of what travel costs are deductible and what aren't, we've got to remember that there's got to be a business motivation behind the whole thing. And in that particular case, nobody was forcing him to do that. It was his decision to go do that. And so the court said, those costs, that mileage that you spend going from location to location that you just kind of blindly charge for the entire year, none of it's deductible to you because there was no business motivation to do it.